Hello everyone, Mark here at TSLA, and Tesla did close red today. Its closing price was $251.45. That is a $2.41 drop from Friday's close, and that's 0.95% down in percentage terms. So before we dive into the charts, let's take a look at the more important news of the day. You probably heard it. Just like I did right near the open when you saw Tesla's price dropping. And it is Zachary Kirkhorn, this former CFO at Tesla. We all know and like Zach a lot. He posted on his LinkedIn early this morning talking about how Tesla just announced that he stepped down from his role as chief financial officer. He is succeeded by chief accounting officer Vaibhav Taneja. Being a part of this company is a special experience, he writes, and I'm extremely proud of the work we've done together since I joined over 13 years ago. As I shift my responsibility to support this transition, I want to thank the talented, passionate, and hardworking employees at Tesla who have accomplished things many thought not possible. I also want to thank Elon for his leadership and optimism, which has inspired so many people. So Zach has been with Tesla for that 13 years that he's mentioned. He's been CFO for the past 4 years. And he doesn't really talk about moving on. Elon did finally talk about Zach leaving his post after the close today, thanking Zach for working through what were mostly very difficult times at Tesla. So I was really wondering if Elon would comment, because it was the whole trading day and not one thank you post on X in regards to who I assume someone who likes and wanted to keep very much so. But let's move on to some other news, and that's going to be Sawyer Mayer posted a little summary of Lucid's earnings that just came out today. They missed on EPS and revenue, and they also lost a substantial amount of money. Again, they have $6 billion in total liquidity. This could mean basically assets, not really cash. And they reiterated their production guidance of 10,000 cars. That would be kind of, I don't know if they're going to do that, but thankfully, Lucid stock didn't crash based off these misses because it has de-risked a lot. So Farzad did some quick math for us. Lucid is losing almost $600,000 for every car it sells. And we also do know that over the weekend or Friday, they mentioned that they'll be actually discounting their cars substantially. So they're discounting their cars and losing over $500,000 per car. They're running out of money and they're producing less cars and selling less cars than they anticipated, especially if you compare it to what they thought they would be doing some 2 years ago. Here's Lucid's price action right now. It is up 3.6% after hours, after reporting. Kind of a little bit violent, but eventually it closed above its opening price if you consider after hours trading part of the day. And you might ask yourself, what? They missed pretty badly. Why would they even be up? Well, it's because they've been down. Number one, they're down today. They're basically just flat for the day. But if you look at for the month, they've substantially de-risked from $8.12 a share at a high a little less than a month ago. And today's low price was $6.20. So they de-risked, from $8.12 to $6.20, maybe around 20% within 1 month's time. And to close 3.5% up for the day, it kind of makes sense. I mean, they've been being beaten down a lot. You ask yourself, why would anyone want to own this stock though? No good reason. I don't think I don't think it's necessarily even a takeover target from another OEM, since they're mostly owned by the Saudis. The Saudis want them to spend even more money building factories over there in Saudi Arabia for some reason. Don't know why. Probably they're going to be kept afloat because Saudi Arabia wants to have some diversification when it comes to the future of energy and automobiles and you can see them doing this from all types of endeavors, from the live golf to having their own soccer league to infrastructure building. And of course, Lucid Auto, because they're trying to make sure that, 20, 30 years in the future, if there was ever a point in time where oil demand collapses completely, that they have a future for themselves economically. Having the technology of Lucid is is maybe the only saving grace for the Saudis. They have some decent technology. They have a good motor. They have cars that they do operate, right? And they can leverage that in the future somehow, some way, maybe within a whole new brand, a whole new company, and just taking bits and pieces from Lucid if it was to collapse, if they were to let it collapse. So that's the basic news for today. Zach leaving Tesla later on this year. He stepped down, but will assist in the transition for 5Hub to become CFO, most likely. There is no information in regards to if they're selecting a new CFO or they're just simply going to promote from within. But it looks like promote from within is the thing so far. Now, to the stock, here's the chart. This is the daily. And we understand that if history was to repeat itself, Tesla would sell off dramatically based off this news, and it kind of did. It opened high and it closed near its high. That drop was 4.3% intraday. So it was a pretty dire look early this morning, because we were actually breaking through the bottom of the range. We were talking about how 248 found a lot of buying 2 months ago, early in this consolidation. There was very sharp buying around this area, but the price today was really falling through dramatically. But it did find some buyers. I'm gonna keep it on the daily for now, so we can take a look at this doji. This is a long-legged doji, and it doesn't necessarily mean anything. Like some people can argue that a long-legged doji like this, where you have this really large sell-off, 4%, that gets completely bought up throughout the entire day, and only close less than 1% down. This could for some people, this could be pretty bullish. It sounds crazy, but and I'm not saying I'm completely bullish, but let's just kind of look at things in context. Now, there's not many examples, firstly, of a reversal of Tesla's price based off some type of long-legged doji like that, or even there's no real obvious like dragonfly dojis. You actually have sometimes just full body candles that just reverse, and that's kind of like Tesla's modus operandi. Like, it's not really, you don't really need dojis on the daily to signify some type of reversal for Tesla. Does it help? It does help. I mean, you can see here that the wicking obviously points to that the pricing doesn't want to go above that point. You can see it from here as well. This is kind of defining a bottom of a range. Does it signal a reversal? I mean, it could. You can consider these reversals, but they're not necessarily indicative to how Tesla's price action moves. So I would say for some stocks, maybe long-legged dojis can be bullish, but I would say this, and we've been selling a lot over the past 2 weeks. It's been since essentially the earnings, and we can just do a little measurement here. So if we were to measure from the day before earnings or the day of earnings to the low of today, we're talking almost 19%. So basically we lost 1/5 the value of our stock sometime this morning. It recovered a little, of course, like we mentioned. Now, where does the selling stop? Right? It's going to stop sometime. And if it's going to stop and it threatened the gap, it probably scared a lot. It scared the hell out of me. It scared a lot of people because it's coming right to the edge of the gap. And it was only a couple dollars away, or basically 1% away from entering the gap on this terrible news. Okay, maybe not terrible for Newsom, but I like Zach. I think Zach is a cool guy. I think he was really good at his job, and it's a shame that we lost him. But from what I'm seeing here, we dove through the 50. So this orange line, this is the 50-day moving average on the daily time frame. We just completely collapsed through the daily, the 50-day, and eventually closed above it. Now, so before we talk about other indicators, let's talk about the 50. How does Tesla interact with the 50 moving average? So typically, it's actually pretty bad. For example, here on the 5th of April, when it gets through the 50, it kind of just collapses. How about here again during the same spring? This is in March on the 8th. It gets through the 50, and of course it's selling into the 50 through the 20, right through the 20, right through the 50, and these are just like strong moves to the downside. Sell, 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 and it sells for many days into the 50. Let's go try to find the 50 when Tesla shares were sold for Twitter. Now you're seeing that the red is the 20 line, and you're seeing just sell right through the 20, and it gets to the 50 and just keeps on selling, keeps on selling. How about over here? Over here, a couple weeks before the selling off for the Twitter purchase, it's getting through the 20, selling, it gets to the 50, sells again, sells through the 50, keeps selling until it gets out some days later. How about in where are we at right here? This is going to be the April of last year. This is a pretty obvious sell through the 50. It's okay. It's like, here's the red again. It sells through the 20. It tries to base at the 50, and it kind of finds a base there. It doesn't get bought up after the 50. It gets to the 50. Next day, completely sells through the 50. It gets bought up like a week and a half later, and it rejects off the 50, sells off again. How about over here? This is over going to be in the early, January 2022. Okay, so it sells really strong. It bounces off. And kind of not really bounces. I would say it for the day, it would settle at the 50. It bounces the next morning after opening into the 50 and eventually starts selling all the way through and stays under the 50 for a very, very long time. So if you're looking at the 50, here's a good example here's a doji, almost like the doji that we had. I want to circle this for future reference. Okay, so sells. It's been selling strong, goes through the 20, goes through the 50, gets bought up, closes above the 50, and then bounces with a little bit of relief. Now, it does continue selling. And this could be a very indicative pattern. Like, it could be like, if you think about the setup for this week, we have CPI on Thursday, right? We have PPI on Friday. It could be very similar to this. It gets bought up. It does a move. Next day, it closes up 5%. Then it goes up another 2%, and then sells off on Thursday. Well, this is ironic. What days? I wonder what the 9th of December was. And it sells another 17% after that. After dropping 20%. This is very similar. So this time frame that's pretty crazy. So if you were to count, I don't know what high you want to count, but if you want to go all-time high and measure to breaking through the 50, that was a 23.5% move, and it bounced, closed above the 50, bounced from the low 13%, and then on the Thursday of that week, it sells off even more. That would be crazy. That would be really crazy. Anyways, sorry, that is kind of interesting now that I see that, because our drop was 19%. We've been selling right through the 20, holding under the 20. We've been rejecting off basically, anytime it hits the 20, you just sell. It just sells. But it got through the 50 and closed above the 50. Okay. And then Thursday over here is going to be our CPI day right here. Interesting. Okay. Anyways. But yeah, what you're basically seeing is that, okay, even though it sold decisively through the 50 during the course of the day, it closed above it. So that's not a bad thing. I know that the chart is dire, and the head and shoulders kind of played out maybe exactly how we thought it would play out. It basically is fully formed now. You have it meeting the neckline, essentially. I mean, it's not exact. You'd have to see 240, 239 maybe to create this kind of diagonal. But it's basically a head and shoulders. It is essentially your island reversal circled in yellow. So everything that we thought played out the way it did. Now, pricing kind of wants to play out sometimes that way, meaning that the market is actually wanting it to happen. It wants to scare people here. It wants to make this. It knows people are watching these patterns. The market isn't stupid. Big money isn't stupid necessarily. They want you to get scared. You're selling, and guess what they do? All they did was just buy the entire day. I mean, it could have been us buying too, right? It could have been us buying too, but sometimes I wonder if we're not really buying that much. If we're so heavily owned by retail investors, but the pricing moves so dramatically, I really doubt the retail investors sitting there at their 9 to 5 selling stock at 10:30 in the morning sometimes. I just don't think that's really happening. I think the idea of retail investors are people that buy a couple shares and hold them and don't sell them. So someone is selling somewhere, and it could be because we're holding so many shares and not actively selling. When you do sell, it does sell dramatically sometimes because there's so few sellers. Yeah. Okay. So here we go. What can also be, what can we take from this that can be a little bit bullish? Well, number one, like if you're looking at the volume profile, basically where a lot of the interest is at certain pricing points, we're right kind of at the gap. Is just this, we've been being basically sucked down through this vacuum of action. And even though there is very little historical price action in this area, you were able to find a lot of buyers regardless of that. That's a good sign, because usually pricing would just kind of, if you're looking on the right hand side, it would just kind of fall through areas that have not much action. And it kind of didn't do that. Now, there are some ideas that, since it was a news that's typically not dropped on Monday, like transitions like this and leadership changes like this don't necessarily would happen on a Monday. Maybe you see these happen on Fridays, something like that. But maybe because it happened unexpectedly on a Monday, the market wasn't necessarily ready for it. They weren't set up to short Tesla so much, as it's been selling off considerably. Maybe it was being bought up for a reason. The reason could be because they want to get their hedges in, and they could create some buying by making it look like you're buying the dip. But the reality is, it's not necessarily a bad price. 240, not necessarily bad. And I know there's probably a lot of retail just sitting on 240s and 230s as far as orders go. And maybe they don't want to entertain that too much right now. But I also can imagine they also want to be able to set themselves up with puts to get ready for a drop in price. And so they would just delay the selling for a day. Now, why could that be? Well, let's look at the volume chart for the options. It's just Monday. You have already 105,000 puts at 245. We have 37,000 at 247.50. We already have 60,000 almost at 250, and we have almost 100,000 $250 strike calls, and it's Monday, right? So we're basically seeing a lot of interest in options already for Tesla. Volume was a little higher than usual as well compared to the last week. So people are setting up for something. There is of course more calls than puts. That's just Tesla style. But the amount of puts being put here, very close to where we're at, it says something. Okay, it's going to say something, either that these are our hedges or these are the puts that are being purchased by the street. In preparation of selling off the stock tomorrow or later on this week for CPI or something like that. Something to just keep in mind. But otherwise, let's go back to the chart. It's really not a terrible look in the context of we've been selling a lot and we found buyers in a way that Tesla doesn't really find buyers like that on a day of bad news. I think the last time we had a CFO change for when Zach became CFO, there was a pretty large sell-off as well, but it stayed low most of the time. But let's go down to a smaller time frame. I'll go ahead and turn off these indicators for now. Okay. So you can see how we didn't really know how to deal with this information. And you can see kind of the volatility here. We tried to close the gap, and it was just up and down, up and down, up and down, and slowly just kind of sold off to that very, very low 242.80 price. And so that intraday move to the close of the day was 3.5%, pretty substantial. So if you caught that move, congratulations. That is awesome. Now, I would like to see I would like to see Tesla continue this move a little bit more. And the reason why I think it's possible is because we have a vacuum of data drops, meaning from until Thursday, I don't think there's really anything substantial economic wise that would be dropping that could affect the price of either Tesla or the overall stock market completely. So it kind of lets price action kind of just flow naturally until maybe Wednesday afternoon, where you might see a sell-off depending on how price action looks on Tuesday and Wednesday morning. So maybe we can get some natural organic movement. But if it is bought up severely, it could also just give you the opportunity to hedge even some more. Let's just draw up a scenario. Like we had a good day in the sense that we dropped a lot and it came back. Okay. It didn't go green. I'm not happy about it. Okay. I'm not saying, oh yeah, we got bought up. Like that's great. No, I want it to be green. Please already come on. But we kind of anticipate the sell-off. So hopefully we're positioned for that. Anyways, what do we want for tomorrow? I would like to see a small move, something like 1.5 to like 2%. That's small, quote unquote. But even if you're Wall Street and you're setting up for the short, you kind of want to pump up the price a little more, get some more shorts in, and get more people to take the shares off your hands anyways, right? So there is a possibility that we can move up a little bit tomorrow. We are a little bit overbought on the RSI, but I mean, stochastic, we have a little bit more room to go up. And these are small time frames anyways. But I would like to see this type of scenario. It gets bought up and we can consider this the spring we are always wanting. And we get to like something like this. So by Wednesday, we're flat, okay? From Tuesday's open. I would like that because I was never convinced in some type of accumulation pattern until now-ish, where we have this action that really was scary for a lot of people. Maybe buy and hold investors, you're not really thinking about it in that way. You're just thinking about, okay, maybe this is another buying opportunity for me. But if you're swing trading Tesla and kind of accumulating shares here and you get freaked out because, and of course, why not, that the pricing just falls to the floor and gets really near the gap, but finds those buyers, I think that's a really good scare tactic that the market can pull on you for them to get you out of your position and get themselves into a position. I think Lucid kind of proves that Tesla, once again, is an exception. It's a very tough macro environment for people that are needing to purchase large, big ticket items, especially those type of items that require loans. It's very, very tough. Now, we saw today, consumer credit came out today, and it was higher than expected. But what it also shows is that the type of credit that consumers were interested in taking on, is even in this high interest rate environment, are auto loans. Okay, credit cards are getting maxed out. We can't really do much more with the credit cards. That is a different type of customer. People who are on the credit cards are using credit cards to supplement their daily spending. That would have been just your basic necessities, and it's really sad to say that, because people are using credit cards to buy food, and that's terrible. But it does also show that auto loans are still a thing. People are still interested in purchasing cars because sometimes it's just like food. You need to have transportation sometimes. And some people might be taking advantage of really, really good deals, okay, when it comes to dealer discounts or manufacturer discounts on cars right now, because they need to move these cars. They need to move metal as quickly as possible. They need to get them off their manufacturing holding lots, get them off their books. They need to show their investors that people are wanting their product. So there are a lot of incentives to buy, and the thought process would be, I can probably refinance in a year, and I can just make, maybe higher payments to compensate for interest, or just refinance hopefully within the year. Now, I do have to say to that, if you guys are thinking about putting something on credit, just know that if Powell is right, that higher rates will sustain themselves, or even slightly higher rates than now could be the norm for a considerable amount of time. And would you be comfortable going into 2025 with a high interest rate car loan, a high interest rate mortgage, high interest rate credit card debt? Something to think about, because the only time those rates are coming down in a fashion that is, maybe palatable for a person taking on credit in this type of environment, you would have to experience a hard landing recession soon, like this year. And maybe you'll see rate cuts when that happens. Okay, so hopefully we can get some follow through tomorrow. Hopefully we can get some more buyers. And I hope this wasn't set up just to sell off even more so. But the action was good for it. It was very scary. It was like, if you just want to talk about for the last couple of days, this move is substantial. This is 8.5% from the peak of Thursday of last week. Okay, so this could have got a lot of people out. And this could be a lot of opportunities for people to go long. If they weren't in Tesla, if they wanted to add, this was a great opportunity for them. I think the market kind of understands that. Now, let's look at the S&P 500 ETF. Look, it was a green day. Now, I get that we've been selling off for quite a bit. It's very rare, I guess, to have 4 or 5 days in a row of red S&P 500 action. So I guess it's not too surprising you found some buyers. But it was kind of, this could be kind of like a trapping move for people who are short, because this is like the gap down, of course, from a couple of days ago, but this is the gap up. And now if you're short here over the weekend, your options are hurting really bad because of the weekend number one, and you get gapped up and bought up the entire day. That's tough. I think without this news, Tesla would be very green. I think Tesla would be up like 1.8% if Zach didn't step down from his position. But this could be a reversal of some sorts, where the market has sold off, and after consolidating for a good while, maybe. I think the thing about it is, we just, with no information dropping within the next 2.5 days, we're going to see the price action be very flat, or you're going to see a little bit of buying to set up a cheaper short into the weekend, depending on how CPI goes. So don't get really trapped on a short duration trade. If you're seeing very little movement in pricing on the market, or even Tesla, I just don't know if it's a great trade. I think Tesla could be a decent trade if you're wanting to day trade. I don't know if the indexes are. It really depends on Apple, right? Apple sold off a lot again today. So what was the movement from the open? Something like 2.3%. And from earnings, it's been rough for Apple, 6.3%. And from its high, 9.3%. So Apple's had a really hard time. If Apple can find a base here, and it kind of did, it didn't sell off like it did last week, where it sold off in the afternoon at 2 p.m. It sold off and just kind of stayed, and I found a little buying after hours and kind of stayed there. So what I'd like to see is a little bit of a relief bounce. If you want to look at Apple, because Apple is a market mover, this thing would definitely move the markets. It looks pretty oversold on the daily, on the hourly. Very oversold on the hourly. Desperately. Like when RSI, can we find when RSI is this burning red? When was the last time that happened? June of last year? Really? When it's that red? Intriguing. But you can watch for a MACD crossover on the hourly to see. Stochastic is really oversold. It's been selling even before earnings. So, yeah, let's hope this is a nice space for Apple, because if it is, there's a lot of interest right here from June. Tesla could maybe go up with it. We hope, right? Now, how did you guys? We talked about hedging all of last week, right? We should talk about the cover call thing again. Remember, when you're doing the cover calls, okay, you have to kind of treat it like a put. sometimes you have to take profit, right? So just imagine the scenario that you're holding a covered call you sold on Friday, because we'd like to sell covered calls on Friday because the weekend is hard to hedge. Like when you buy puts, you need the stock to move 1% or so to even just break even on a weekly put over a weekend hold. So imagine if you sold a covered call, and let's just measure from the open. We moved 4.3%. A 4.3% move on. Just think about this. If you bought a put today, okay, and the stock of whatever put you bought for was to move 4% down in that day, ask yourself, would you have sold it to take profit? If the answer is yes, think about your cover call. It's essentially a short. Would you have closed out your cover call after a stock moved down 4.3%? I hope that the way your trade is structured, okay, that you can close that trade and take profit. Maybe you have runners of some other type to continue hedging Tesla. But if someone said you sold a cover call, the cover call you sold is now in profit by something like 68% or something, that's not a bad time to realize some profit for your hedge. Now, you can close it out and then do what? We talked about this again. You close it out, you wait for pricing to go back up, and you can sell one again, right? It's kind of like, it's no different than buying a put. You short a stock intraday, it goes down a bunch, you close the put, you take profit, you see that it's getting bought up, and then at the end of the day, it closes very green, you buy put again, and that hedges your position again. So that's what you could have done. That's what I did. So when I saw Tesla get down to, I want to say it was like negative 3.3%, I closed out my cover call, and I had 3 other puts that I kind of let ride down to the lows, and I closed 2 of them out. I wouldn't say perfectly. I honestly, it's probably around 243 something. I let one ride to here, and I got like, I need to close it, and I closed it at around 246. At the end of the day, I sold another call for Tesla. I bought 2 more puts, just to kind of hedge my position and maybe try to make a little money with the premium on the call. So, but otherwise, this could be a spring for us. I haven't been really positive lately. I'm sorry for that. It's just that the action has never looked that great. I just hope this is it. So, if into Wednesday you see Tesla kind of like curl and de-risk like that, it's not necessarily a bad thing to go into Thursday little de-risked, because then what will be forming is kind of like inverted head and shoulders, right? That's the hope. But we always prepare for the downside. I like people saying hedge until you can define a trend. Our trend is just sideways, and a short-term trend is down, and a long-term trend is up. So your play should be kind of like in that duration. You could be short on the short term. You're definitely long on the long term because you own shares. And we've been still consolidating. We haven't broken our consolidation yet. Like I said, though, when we're in the gap, maybe short. Yeah, on all time frames. So, guys, I think that's all for me for now. Thanks so much for listening. And just cross your fingers and let's find a green day somewhere, man. All right.